Mastering trading will turn you into a well-oiled, profit-generating machine. But it all starts with having the right foundation. Without it, you risk years of frustration and thousands of dollars. In this video, I'll guide you through the exact steps to build that solid base so you can navigate the markets with confidence. And I'll even show you how to gain access to capital for futures trading. The trading world is full of noise, different strategies and countless products, and endless advice on YouTube, making it hard to know where to start and what to stick with. When I began trading about 5 years ago, I made a lot of mistakes trying to figure things out on my own. I wish I had a clear guide back then, which is why I'm creating this video, to give you the tools and insights I wish I had when I first started trading. Today we're diving deep into the mindset, charting, the brokerages I recommend, and the essential tools that will set you apart. Whether you're just starting out or you're an experienced trader looking to sharpen your skills, this video will equip you with the fundamentals to elevate your trading game and approach the markets with clarity and discipline. As traders, success begins in your mind long before it reflects in your trades. Mastering the right mindset is key to navigating the highs and lows of the market. The aim isn't just to make profits, but develop emotional resilience, mental clarity, and disciplined focus, especially when trades don't go as planned. Think of the market as a constant test of your psychological strength. The ability to manage your emotions, stick to your strategy, and resist the temptations to chase quick wins is what distinguishes successful traders from those who struggle. In the performance process cycle, the mindset is the foundation of the being phase, and where you mentally prepare for the challenge ahead, building the emotional capital needed to make clear and rational decisions. Section 2, discipline and the performance process cycle. Discipline is the backbone of any successful trading strategy, and the performance process cycle provides a structured approach to maintain that discipline. This is from the book Stephen Goldstein, Mastering the Mental Game of Trading, right behind me. And I really liked his approach and want to share it with you guys. This cycle breaks down into 4 phases: being, production, performance, and letting go. Here's how each step helps you stay on track. The being phase, planning. This is where mental preparation takes place. Before entering a trade, have a clear strategy in place. Define your entries and exit points, risk tolerance, and goals. This phase is crucial for building mental clarity and ensuring you're not making impulsive decisions. Production phase, executing. When the time comes to act, stick to your plan. The moment of execution is when emotional control is most critical. Traders who can stick to their strategy in the heat of the moment are those who succeed over the long term. Performance phase, reviewing. After the trade, assess the outcome. Did you follow your rules? What could you have done differently? The review process isn't just about analyzing wins and losses, but understanding how well you adhered to your system and where improvements can be made. Letting go phase, resetting. This phase is vital for clearing your emotional and mental state after a trade. No matter the outcome, you must detach yourself emotionally from the result. This is where many traders struggle and when they fail to let go. The risk of short-circuiting the cycle, jumping straight from one trade to the next without proper reflection or resetting. This impulsive behavior driven by ego or the need to quickly recover losses leads to rash decision-making, emotional exhaustion. This impulsive behavior driven by ego or the need to quickly recover losses leads to rash decision-making, emotional exhaustion, and ultimately poor performance. Letting go properly allows you to reset your mind, replenish your mental capital, and prepare for the next trade with clarity. By not skipping this phase, you avoid the emotional traps that lead to a destructive cycle of overtrading and poor decisions. All right, let's dive into the platforms and softwares that I personally use to stay ahead in the trading game. To be a great trader, you need access to reliable, powerful tools, starting with a solid charting platform. My go-to is TradeVue. It's user-friendly and packed with features specifically designed for technical analysis. If you love it, diving deep into the charts, using advanced drawing tools, and experimenting with custom indicators, TradeVue has you covered. It's perfect for both beginners and seasoned traders looking for highly customizable and professional grade charting. Now, when it comes to brokerages, I highly recommend Charles Schwab, Thinkorswim, TOS, or IBKR Interactive Brokers. Both are highly regarded in the trading community and come with tons of flexibility, especially for day traders. One of the biggest advantages of these platforms is how customizable they are. Whether you're focusing on quick, high-volume trades or long-term strategies, these platforms allow you to fine-tune the interface to fit your trading style. Plus, let's talk about reliability. Both Schwab and Interactive Brokers are among the most trusted brokers in the US. and are heavily regulated, so you can trade with confidence knowing your assets and trades are in the safe hands. So whether you're a beginner or looking to up your game, these platforms provide everything you need for success. Okay, now let's talk about how to find key levels on any stock so you can buy these levels as supply and demand and make some money. Identify key resistance and support levels where price has reversed or bounced in the past. Look for areas where price has rejected or bounced multiple times, and look for big whole number levels. Example, 400, 450, 500. Big psychological areas where traders are going to put risk on and size. These levels often act as psychological support or resistance, as traders tend to focus on round numbers. Tip: multiples of 10 can serve as an ideal zones for managing risk or putting on risk. Also, areas where the security made large moves. Significant price moves often indicate high interest zones, demand or supply, making them crucial to watch for future action. So what this means is areas where we had a massive gap down. So if we had a massive gap down, you could look for a reject at the area where we gap down for pullback back to the downside. Also, if we gap up, the area where we gapped up from, you could look for a bounce. So those are the areas where you can look for key levels, supply and demand, where you can make some money. Now I'm gonna show you why I plotted these levels. Okay, so if we look at my iPad here and we go on TradingVue, why did I plot most of these levels? If we look right here, I plotted this level right here, this 5,400 level, because it is the low of September 9th and we bounce off that level. I plotted this level up here, this 5,734, which you could just round it up, 5,735 level, because that is the high. I also plotted this level right here, 5,500, because that is the open of a gap up and it's a big psychological level. Big whole number. Also, this level right here, 5,460. I plotted that level because that was where we closed and gap up. So that's gonna be buyers, and you can use those levels as supply and demand in areas where if we fall below back down that 5,500 area, like we did here where we sold off back below 5,500, and then you could have played it to profit target 5,460. That could have been your first area where you take off some profits. This day right here, so it's gonna be this day is Wednesday, 11th of September, 2024. Okay, this was an amazing day right here. Right here, we came back down and retested 5,400, a big psychological number where you could have put some risk on there and you could have made some serious money. I know traders who made 6 figures that day. So using supply and demand is all you need, and trusting your levels and understanding that if the trade doesn't work out, it doesn't matter. You need to continue trading and making the best possible decisions for yourself and learning from your mistakes. If you caught a trade like that, the one I just circled on September 11th, that could have changed your whole trading career if you caught it properly and with a large amount of size. So also, areas where we rejected or bounced multiple times. So this level right here, 5,565. This level, we bounced 1, 2, and then we broke down over here the third time. That is the reason why I plotted that exact level too. And then we also have this other level right here, 5,675, I believe. Oh, it's actually 5,650. So the reason why I plotted this level is because we had multiple rejects around this area. Multiple. That is why I plotted that level. And this is just an explanation of why I plotted these levels. I want you to go and get some screen time in and learn yourself. And I told you how to find any levels on any stock just right before this real live video. So go ahead, put it into action. Let's move on to the video. One of the key factors in successful trading is mastering your risk to reward ratio. This is what determines how much you're willing to risk for a potential gain on every trade. If you don't understand this, you could find yourself taking unnecessary risk without the right reward in sight. If you don't understand this, you could find yourself taking unnecessary risks without the right reward in sight. A solid rule of thumb is aiming for at least 1-to-2 or 1-to-3 ratio. This means for every $1 you're risking, you're looking to make $2 or $3. Now, in some high conviction trades where you're extra confident, you might push for a 1-to-5 ratio, where you're taking $1 risk to potentially make $5. But remember, the higher the reward you're chasing, the lower your win rate might be. So it's all about managing your expectations and staying disciplined. Keep that in mind. Successful trading isn't about winning every trade. It's about making more on your winners than you lose on your losers. Now I'm gonna break down this risk to reward chart and think out of 100%, think of it 10 out of 10. So with a 1-to-1 risk reward ratio, for you to even break even, you would have to correctly speculate 5 right trades out of 10 to be break even. For 1-to-1, for you to make some money, you would have to correctly speculate 6 out of the 10 trades. Now, if we go to 3-to-1, you would only have to predict 3 trades right for you to be profitable. 4-to-1, if you even just get 2 out of the 10 trades correct, you lose no money. If you get 3 out of 10 trades correct with 4-to-1 ratio, you are profitable. Now for 5-to-1, you're profitable only on 2 trades. That's why a higher risk reward ratio, you're going for a higher number of dollar point move is gonna make you more money. And you should be going for those higher point moves instead of just a scalp or whatever, just a random trade. You need to be planning your trades and going for the correct trade that has enough risk for the type amount of money you're gonna be putting on that trade. You're scalping, that's fine. Scalp with small amount. You don't really have to be worried about the risk reward ratio when you're scalping, but be prepared to enter and exit quickly. Versus if you're taking a longer day trade and want to make over 100% return, you're really going to want to understand your risk to reward ratio on that trade and control your emotions and do it to the best of your ability. Let's dive into funded futures accounts. This is a real game changer if you're looking to scale up your trading career without needing a massive capital reserve up front. Programs like Apex Funded Trader give you the opportunity to trade with someone else's capital once you've proven your skills. Imagine being able to focus on refining your strategies and making real money without risking your own savings. Sounds great, right? But here's the best part. You can scale these funded accounts once you've mastered trading futures and can consistently make money on one account. You're not limited to just that. You can add more accounts. Imagine adding 9 more accounts and multiplying your profits. That means instead of making money on just one account, you can make 10x the profits by doing the exact same thing across multiple accounts. It's all about scaling your success without taking on extra risk. If you're serious about leveling up in your trading journey, this is a powerful tool you need to explore. If you want to open up your own funded futures account, the link is down below in the description. Section 6, journaling and backtesting. Lastly, one of the most underused yet powerful tools in a trader's toolkit is journaling and backtesting. This is where you analyze your trades, look at what went right or wrong, and improve your strategy. Platforms like TradeZella, TraderVue, or even simple spreadsheets can help you keep track of every trade. Write down what you were thinking before and after each trade, your emotions during the process, and the results. Backtesting your strategies against historical data will also help you fine-tune your approach. Journaling and backtesting aren't glamorous, but they're crucial if you want to stay consistent and grow as a trader. So that concludes today's video. From mastering your mindset to using the best tools, I've hoped you picked up some valuable insights to improve your trading. Remember, trading is a marathon, not a sprint. It takes discipline, strategy, and commitment to be constantly learning. As a trader, myself, I'm not going to come on here and just give you a strategy to use. I want you to get on the screen, get some screen time, plot your levels, find your own strategy that works for you, and understand the game, practice, backtest, continually charting. To become the trader you want to be, you have to have a process and a strategy that you do not run from. You don't get emotional and take a stupid trade or any of this. And I want you to find that. I could have just came on here, gave you levels, easy strategy to use, but I want you to find it and you to become the best version of yourself. So if you found this video helpful, be sure to like and subscribe, hit that notification bell so you don't miss any future videos. Thanks for watching and happy trading.